Tech stocks on fire as Google parent Alphabet becomes the fourth U.S. company to reach a $1 trillion market cap. Big tech is now worth over $5 trillion. So have some of these tech stocks become too expensive? We asked that question to Jim Russo, the chief investment strategist at Altrius Capital Management. Jim, good morning. Thanks for joining us. Has tech gotten ahead of itself? Yeah, well, as a great American philosopher, Yogi Berra once said, it's deja vu all over again. It really feels like it's the late 90s, 2000. These valuations are crazy. And back then, we couldn't own Microsoft and Cisco and Intel because they were selling at 100 times earnings and not paying a dividend. And now, the Amazons of the world, the Netflixes of the world are in that same space. And it's one of these things where I think you can not have to swing at this pitch. You don't, to use the Yogi Berraism, you can let that pitch go by and not have to purchase that company at these valuations. So you're saying stay away from Facebook, Amazon, Apple, Alphabet, and Microsoft?
All of the FANG stocks I would avoid. We still own Apple. I think Apple's reasonably priced, but it's certainly run up tremendously. And we sold Microsoft last year. Wow. I think at this point, Apple, we're really getting closer and closer to. It's been a wonderful company for us, obviously.
So how is it then that Alphabet just became, well, three companies, the third company right now, to have and hold a $1 trillion market cap? A lot of folks are saying you really saw the run up in the shares when the co-founders stepped aside and they're letting CEO Sundar Pichai run things because he's probably more friendly to shareholders. You might see the first ever dividend, for instance.
Right. I think what you have is this proliferation of passive investing and ETFs now. So the big get bigger. You have the mathematical algorithms basically driving investors into the stocks. And because they're the highest market cap, they continue to get bigger. Yeah. At some point, though, call me old-fashioned, but what you pay for something matters. Okay. And I think at this point, you have to be really careful at some of these really highly priced stocks.
But at the same point, or if you're not in it, how do you win it? Because if you look at the FANG stocks, they're almost a fifth of the S&P 500. So many people are invested to follow the S&P 500. So if those stocks go up, it's almost like the rest of the market goes up and vice versa.
It's true. And you are missing some of those gains if you're not in those stocks, certainly, because they're driving the performance. If you look at the FANG stocks, they're really pushing it. But you can still participate in this nice rally we've had by owning plenty of other companies that are priced much cheaper right now.
How do you feel about Tesla and Apple? Because we spoke about Apple, but Tesla too, really expensive stock in the 500s. Certainly these are the most shorted companies, and hedge funds are starting to say, yeah, they look like they're going to crumble too.
Yeah, I would never short a cult stock. As much respect as I have for Elon Musk, I think that's very brave to do that because it can just keep going. But I wouldn't own Tesla at this valuation.
Okay. And recession. Wilbur Ross told our Lou Dobbs last night, no recession is coming, not in the year 2021. Would you agree?
I agree. I don't think we have a recession in the near term. You never know, of course. Hate to take a definitive statement, but I think everything really, the economic indicators are really looking very good right now.
Okay, so you won't go against the cult stock. The big tech companies are too expensive and no recession. Jim will take it. Thank you very much for joining us.
Thanks for having me.